Holy smokers, everybody. The markets are up big today. Not only the stock market and the bond market, but also precious metals, things like crypto. Basically, everything is up today. And the key question is why? And obviously, it all has to do with the Fed meeting that happened around noon today and the statements Jerome Powell put out. There was maybe some hesitancy. Oh, is he going to raise rates again this year, or is he going to hint of more rate hikes? So investors were hesitant going into this meeting, but really today he talked a lot less hawkishly than he has in the past, a lot less aggressively in terms of his future outlook, and investors definitely took that and ran with it. So, in my opinion, this is an important inflection point just going forward. I think we're going to see a lot more risk on type of mentality throughout the end of this year going into 2024. I think the first few months of that year, this coming year, are going to be characterized as risk on in the markets. So, back into more growth stocks, getting out of cash, maybe even getting more into bonds because bonds are at very bargain yields right now. So, probably getting out of cash for the most part. But there were some key statements Powell put out. First of all, he said that he wouldn't need a recession to cut rates. So, kind of an obvious statement there. Obviously, the central bank could do what they want with rates, but he's saying that they might even cut rates in 2024, even if they're not seeing a recession. And the market right now is pricing in a 1.5, 150 basis point rate cuts in 2024 in the coming year. And Powell has said that he's forecasting to cut rates 3 times this coming year. Now, do they always, stay in line with their projections on rate hikes or rate cuts? No, they don't. But it's important that Powell is starting to talk about rate cuts, and the market definitely took that and ran with that as well. He's saying it'll be a topic of discussion going forward. That is rate cuts, and the market is pricing in 1.5 percentage points of cuts in 2024. And that would take the benchmark Fed funds rate down to under 4%, from around 5.2 to 5.5% where it is now. Obviously, the Dow surged aggressively on this to a record high. The Nasdaq is very close to record high now too. It also rallied aggressively. S&P did as well. Small caps really rallied. These are going to play some major catch-up rallies, in my opinion. They need to. And also, the bond market rallied very aggressively. Rates came down because investors see this as a good opportunity. If the Fed's going to be cutting rates in the coming months, you might as well lock in some good bond yields for the coming 10 or 30 years if you can. Um, Also, he's saying that a recession is still possible. This was maybe his only sort of cautionary statement that he put out there. So, if that's as cautious as Jerome Powell got, I can see why investors kind of ran amok, so to speak. He did sort of threaten we are prepared to tighten further. He's saying that we're prepared to tighten further if appropriate. While participants do not view it as likely to be appropriate to raise rates further, neither do they take the possibility off the table. You know, in my opinion, investors, if they do kind of continue to run with this and, send prices in the stock market and risk on assets up aggressively and maybe as aggressively as I think they could, if it turns into a melt up kind of scenario like what David Hunter has talked about extensively. I've talked with him 3 times now. I'll be talking with him in the couple coming weeks. But, with David Hunter has laid out a scenario in which actually the Fed could hike more once they begin to see investors really start to misinterpret their statements, to not be cautious, in the fear that that would reignite inflation, which is kind of the whole reason why they've had to hike rates so much. So, unfortunately, if investors do get way too optimistic and the stock market keeps rallying, especially if that results in higher inflation prints going forward, or if the central bank has reason to believe it would lead to that, they could hike again. And then, in Hunter's opinion, that would be almost the exact wrong time for them to hike, and that could lead to a financial crisis, as he's talked about. Economic growth has slowed substantially in the fourth quarter, so despite the higher than expected third quarter GDP print that we got, that encouraged investors, Powell's saying that growth has slowed substantially. This could be an aspect of why he's actually talking about cutting rates 3 times in the coming year. Is maybe he is actually forecasting for himself. Maybe the Fed's thinking that a recession is likely in the coming year, and so they're having to start to think about that, although not let investors know that they'll be cutting rates that aggressively. Um, and then lastly, this was also encouraging to hear from Powell. He says that inflation has eased, though it remains elevated. And yes, it does remain elevated. It's at 3.1%. It's not at their 2% target, which kind of an arbitrary target. Ideally, in kind of a libertarian economic mindset, inflation should not be an issue. You should not have inflation, but the Fed says they like to maintain it at 2%. If they do get it down there, that does take the need for further rate hikes away to a certain extent. So what does this all mean? Everything I've been talking about, in my opinion, it does mean investors are going to continue, kind of this fear of missing out, chasing the trend higher. I do think that continues for the coming months, end of this year for sure, and definitely beginning of the coming year. Why this is important? I think investors are going to stop being as cautious as they have, being in cash, being on the sidelines, being in more defensive stocks or bonds or whatever they've been in. I think they will start getting back into risk on assets. So definitely getting out of cash in the coming months. And in my assessment, there is a lot of liquidity still out there on the sidelines, even though some data might not suggest that, with credit card debt being sky high, new all-time highs. What year isn't it at all-time highs? But there is a lot of dry powder on the sidelines in my assessment. Just talking with other investors out there, whether they be large, small, they tend to have pretty significant piles of cash on the sidelines that they can put in should they want to. And once you start to get analysts raising their price targets on stocks or indices, and kind of the leapfrogging that happens there, people chasing each other, trying to get these returns that they'll see in coming months are pretty significant. Nvidia's up 400% in the last year. You probably could get some other stocks that start doing some moves like that in coming months. And once people start to see gains that they could have had that they've missed out on, all of a sudden they start to dogpile into the stock market, which does become a self-fulfilling prophecy, and it starts going higher. Obviously, that does not continue forever. It will stop at a certain point. It could end badly, as David Hunter has said, and if anything, the kind of boom bust economic model would suggest that it does have to end in a bust. But all this being said, I do think this is an important inflection point, definitely for stocks, definitely for bonds as well, but also for something like gold and silver, which has really underperformed. Now that the Fed is talking about rate cuts, I do think that does get a lot more attention put onto gold and silver. Definitely the miners as well, which have been in the doghouse the last 3 years, but that probably is about to change in my assessment. I would love to hear what all of you think about this important Fed meeting, in my opinion, maybe the most important of this year, at least looking at investor sentiment and how that has turned on a dime today. I'd love to hear what all of you think about this in the comment section below. Hope to see all of you again at some point, and yeah, hope you have a great day.